Right. ඒකේ ඒතන මේ settings වලට යන්න පුළුවන් මොකද එතන කැමරා එකේ settings තියෙනවා.
Right. Okay, Rashika, yeah.
Good afternoon, ladies and gentlemen. It is my privilege to warmly welcome you all to today's webinar on application of cost accounting standards in the manufacturing sector, organized by the Institute of Certified Management Accountants of Sri Lanka. We are delighted to have you with us for this important and timely session, which aims to enhance understanding of the features, benefits, and practical applications of cost accounting standards in manufacturing sector. The Institute of Certified Management Accountants of Sri Lanka has released 19 cost accounting standards known as CASSL for use in the corporate and public sectors of Sri Lanka. Today's webinar provides an excellent opportunity to gain insight into these standards and their practical applications. So without any delay, let us begin today's program. To commence our program, it is my privilege to invite Professor Lakshman R. Vatavala, President of CMA Sri Lanka, to deliver the welcome address. Professor, over to you.
Good afternoon to all our speakers, panelists, and of course, all our participants, many of them who are our members, and those from the public and the private sector. Today, we are discussing a very important topic on the application of cost accounting standards in the manufacturing sector. I think many of you were there when we launched the cost accounting standards, and now we are going into the different sectors and taking the manufacturing sector today and discussing in detail. So I must thank our chairman of the Cost and Management Accounting Standards Board, Mr. Mahendra Jayasekara, who's present here, and also our technical committee that have been working very hard, led by Dr. Mangala Fonseca, Dr. Tiral Roche, and Ruchira Pereira. They will be really conducting this technical program, and I must thank them for the hard work that they have put in, because they will be going through the details to explain. Because you should know that this is the first time that Sri Lanka has adopted the cost accounting standards. And what we are now doing is to see the implementation of these cost accounting standards in the different sectors. So first of all, we are going into the manufacturing sector, and then we will go into the others. Just to state a little about the cost accounting standards, we had a MOU with the Indian Cost Accountants Institute, and I must thank them for the support that they have given us in implementing the cost accounting standards applicable to Sri Lanka. At the moment, we have issued 19 standards, and those were explained earlier by, I think, when we had an earlier seminar. And now we are going into the sectors, as I mentioned. And if you really look at the cost accounting standard, this is the first time that we have officially and also formally put down something for the manufacturing industry and all other sectors as to how they should keep the cost accounting records and apply the cost accounting standards. Now, if you look at the cost accounting standards, the primary use is that you will have uniformity, you will have consistency, and standardization to measurement. This is really not present at the moment. So we need the government and the public sector to follow these standards. the classification of the assignment and presentation of cost data as per the general purpose cost statements or the generally accepted cost accounting principles. Now, that's another important thing. I'm sure the technical team will be going through all those things. Then we also have to ensure that there needs to be certain statutory compliances. So here we need the support of the government. And if you look at India, you will find that under the section 148 of the Indian Companies Act requires specified regulated and non-regulated companies to maintain proper cost records and carry out a cost audit. Now, this is something that we are hoping that the government will accept, and we need the Companies Act to include the cost accounting records and cost audit, because it's not just the maintenance of books and accounts and records, but cost records, which has never been mentioned anywhere. Then the uniform cost computation, that's another great advantage, ensuring that different enterprises calculate the cost of production and the valuation of their inventory using identical measurement principles, removing arbitrary and subjective interpretations. Now, that's a major problem that we face. Arbitrary and subjective interpretations. So here, the Institute of Certified Management Accountants, a body set up by an act of parliament and having as its objectives to prepare cost accounting standards and make it available to industry, services, the government and everyone. So we need now the government to support us in this regard and ensure that all institutions would really apply these cost accounting standards. Then the other important area, pricing and profitability analysis. Everyone is saying price is high, but we have now the cost accounting principles, the cost accounting standards will lay down, helping businesses to accurately identify expenses related to materials, labor and overheads. That's very important, because I know maybe even recently we have really taken up various things on the materials, usage of materials, the efficiency, the productivity, the wastage that is occurring. When you buy materials, if you do not buy at the correct price and of the correct quality, we cannot put any losses on the consumer. So that's something that the cost accounting standards, by implementing the cost accounting standards, you can ensure that the selling prices are fair and also will be affordable by the public, or their operational margins would be reasonable. That's something that the cost accounting standards. Then on the regulatory and tax assessments, now you will be able to get credible statements, verified cost data to regulatory authorities. If you take the GST and calculation of various taxes, and also where the tribunals are concerned, where like the transfer pricing, where the cost accountants, the cost standards will come in. So all right through, it will really help and enable better control and proper mechanisms to be maintained. Then, of course, the performance benchmarking, allowing investors, boards, and management to fairly compare cost efficiencies across different companies within the same industrial sectors. So you can't just go and put various expenses and say this is my cost and then charge the customer. We are giving the standards. You have to follow the standards and then do it. So it's really of benefit to the government to regulate the industries that should apply this. Then, of course, we have the most important thing of the societal importance of cost accounting standards, because ultimately all these expenses that are incurred by a company, all the productivity, inefficiency, everything will be passed on Now, one of the examples is the electricity industry. Now, we have spoken to the Public Utilities Commission and they have agreed to implement cost accounting standards and a cost audit in these institutions. Then we will be able to see that the proper cost will be going to the consumer. Efficiency will be taken, productivity will be taken, and inefficiency will be shown, and of course wastage and corruption will be shown. So really cost is a formula for most of the maybe wrongdoings or most of the problems that we are facing at the future, in the present. Everyone is today, when you open the papers, it's really the cost. Cost has gone up. So that's why these cost accounting standards have been brought in. And I'm sure that today we are going to listen to our technical committee on this area of the technical, on the manufacturing sector, which is a very important sector. When we say manufacturing, we should need the authorities, the government regulators to come in on sectors like the electricity sector, where they will implement it and ensure. We have to make it compulsory. We have to make it mandatory so that these records are maintained and the proper costing is done so that the consumers will not be affected, industries will not be affected, or the individuals will not be affected. So I'm very happy that we have been able to do this, but we need the support. We need the support and the assistance of the government. It's really the government, because in the case of the government, not only they will get the cost, but they will also look at the value that is created. That's another area, separate area that we are doing. So I must thank all our cost accounting standards board for the very efficient manner in which they have been dealing it, the technical committee, and of course the other members who have really supported this. And I'm sure that the various national bodies, now we've just started another event, the National Cost and Management Excellence Award. We have extended the date up to the 28th of August, and I do hope that all those who are here will see that their institutions will apply for this, because there are two important areas in this. Not only that you can win an award, but you can display and show that you are maintaining proper cost records and cost accounting. In addition to that, it will be a system where your systems will be improved, and in the future your bottom line, your costs, your pricing, all will be really in an excellent manner. So once again, I wish thank everyone who is attending this, and also, as I mentioned, the chairman of the Cost and Accounting Standards Management Board, our technical committee, many of our council members, our CEO, all of them are present here, and that all of them will take this very seriously and ensure that this will go to all the authorities and they will cooperate with us in implementing this. Thank you very much.
Thank you, sir. We will now move on to our next session, the standard setting process. To take us through this important area, I'm pleased to invite Mr. Mahendra Jayasekara, Chairman of CMA Sri Lanka Standard Boards. So Mr. Jayasekara will be providing us with valuable insights into the process behind the development and the setting of cost accounting standards. Over to you, sir.
Yeah, thank you. Thank you, Rashika. Good afternoon to all of you. Professor Lakshman Vatavala, President CMA Sri Lanka, our distinguished speakers, Dr. Mangal Fonseca, Mr. Tiral Roach, and the other panelists who have joined from overseas, Uchira, fellow professionals, and ladies and gentlemen. It's a pleasure to speak to you today on a subject that goes to the very heart of manufacturing competitiveness. That's the application of cost accounting standards in the manufacturing sector. As you all know, 2 months ago, we introduced 19 cost accounting standards. I think another 5 more cost accounting standards will be introduced shortly by CMA Sri Lanka, UI Institute, and along with the Cost Accounting Standards Board. So actually, today we are going to talk about cost accounting standards in the manufacturing sector. I am not going to talk about the standard itself because Dr. Mangal Fonseca and Tiral Roach, who were the members of the technical committee, who were responsible for developing the standard, will take you through the nitty-gritties of the standards. As Professor Vatavala mentioned, we got the assistance of the Indian cost accounting standard boards in developing these standards. Actually, sometimes I wonder whether our stakeholders and the wider society have really understood the need for these standards, because sometimes I tend to think that our stakeholders think that we are trying to push down a bright idea we have conceived to introduce these standards without letting the people understand how important the cost accounting standards are. Sometimes they may be thinking that we are trying to push down something forcefully that we really may not need. But I think it is not so, because I think we are yet to understand fully the importance of cost accounting standards. Now, this is not in any way an attempt to encroach on the financial accounting standards we are so familiar with. This is a different approach, and this is a different mechanism. Because I believe, as an accountant myself, that our accounting professionals have more studies to do to understand the real benefits the cost accounting can bring to an organization. We, in our organizations, we try to implement lean manufacturing, cost efficiency tools, and then maybe TPM and all these exercises in order to manage our cost. Why do we need to manage our cost? Sometimes people think it is to prepare a better set of financial statements. Actually, the cost accounting standards will not give you a better set of better set of financial reports. That I think the financial accounting standards are very capable of doing. But what the cost accounting standards are going to bring to the table is not a better set of accounts, but to but uh, uh, but it is an attempt to produce better information for better decisions. That is what the cost accounting standards will bring to the table. It will help you produce better information for better decision making, going beyond the financial accounting reports we prepare for organizations. Now, when we speak about the cost accounting standards, what we have to understand is something that goes beyond the very boundaries of your own organization. We need to understand how it can benefit the society, because finally, as professionals, we should be able to go beyond our professional boundaries and do something to uplift the standards of our society as well. So that is where the cost accounting standards can play a major role. As Professor Vatavala mentioned, I'll just take two examples. As Professor Vatavala mentioned, electricity sector is an important sector. Now we are talking about, in our country, the need to have cost recovery pricing or cost reflective pricing. Now people think that it is an IMF idea. Okay, it may be an IMF idea, but I don't consider it to be an IMF idea only, because I consider it's a national idea stemming from a national need. Because sometimes cost reflective pricing, when we talk about this subject, people tend to think cost reflective pricing and cost reflective pricing recovery is a matter of identifying what your cost is and putting it on a bill, sending it to a consumer and recovering it from him. I don't think so. Cost reflective pricing is not putting the cost on a sheet of paper, adding a margin, sending it to a consumer and recovering it from the consumer. You have to look at it from a wider angle. That is what the cost accounting standards will bring to you. Now, if you take cost reflective pricing, especially for the say electricity sector, electricity boards, electricity producers' purpose is to provide electricity at a reasonable price that can be affordable, that should be affordable to the consumer, and also that will spur economic growth, sustainable economic growth. So when you think of sustainable economic growth, cost reflective pricing goes beyond the electricity bill, because sustainable economic growth from that sense means providing electricity in such a way that it can maintain the competitiveness of industries. It can maintain competitiveness of industries so that they can be globally and locally competitive. And it should be able to, pricing should be able to invite and promote and invite investments into the country. Then how much we can earn as foreign exchange to the country through a proper cost reflective pricing, because foreign exchange earned is also part of the recovery process. Part of pricing recovery is embedded in the foreign exchange we earn for this country through our manufacturing industries. Then how about employment generation? How about salaries and wages we pay our employees through a sustainable manufacturing industry? And how much indirect taxes we collect in terms of VAT and maybe social security levy and maybe the PAYE tax collection from employees' wages. They are also part of cost recovery process, because you can't just take cost recovery in terms of the price you put on the label and charging it from the consumer. So there is a wider angle to these cost accounting standards. That's what we need to understand. Then number two, now say for example, our manufacturing industries are lobbying the government for better tariff policy. How can a government come up with a better tariff policy if the government does not know what the actual cost of the products are? Now, say for example, if you are producing something for export purposes as well as for import substitution purposes, selling it in the local market. Now, if the import tariffs are lower, you may find it difficult to compete in the local market. You go and lobby the government for better tariff. How will the government know that your cost is actually prepared based on a proper framework, based on some standards? If the government can feel comfortable, get assurance that the cost you are providing has been computed according to internationally accepted accounting standards, then the government will be able to call for cost information from the importers also. Importers means the exporters of other countries. If we are adopting cost accounting standards in our internal processes only, we will be able to confidently go and lobby the government that the tariff policy should change. That is another benefit, because we have not thought of cost accounting standards from these angles. That is why in my initial remarks, I said sometimes people may tend to think that we are trying to push down something, shower something down our stakeholders without giving a proper benefit to them. But it is not so. So that is what I am trying to say, that cost accounting standards go beyond mere financial reporting standards and financial reporting exercise. It is always to provide better information for all our stakeholders. And then it also provides a very common and disciplined framework for measuring, classifying, allocating, and reporting a cost. So it's a disciplined framework. Now, say for example, if you are implementing TPM in your organization, total productive maintenance in your organization, you invariably compute the cost of idle time, how to allocate cost of indirect labor, what is the cost of breakdowns, so on and so forth. How do we allocate these costs if you don't have a systematic framework, well accepted framework? If you don't have a well accepted framework, you will be allocating your expenditure according to your wishes. Because what happens is, in the corporate sector, people prepare cost accounting reports to their advantage, to the advantage of the management. Actually, even I myself have done that, I must confess. That is because there was no proper framework for cost accounting standards. If there is a proper framework for cost accounting standards, even the boards will be comfortable that accounting professionals in the organization are providing this cost statement for decision making processes of the board according to well accepted, internationally accepted accounting standards. So that is a very important thing. And what we have to understand is that I don't need to say this, but standards always bring consistency, uniformity, and comparability. And if we have these standards, only we will be able to confidently put out our reports so that it can be compared with other organizations, our competitor organizations, without any iota of doubt that these set of reports provide a better presented cost accounting information at that cost accounting information is prepared based on international standards. So I think I have spoken enough about the importance of this process, and we hope to take this down to all our stakeholders, explaining all 19 standards one by one. So today we are dedicating ourselves to explaining the manufacturing cost standard, and we have very able speakers on this subject, Professor Mangala Fonseca, who chaired the technical committee, and Mr. Tiral Roach, who was involved in this process right from the beginning. They have wealth of information, and they have been somewhat trained also by the institute, and they have drawn on the expertise of our foreign counterparts who are experts on this subject. So I think this will be a very fruitful session for all of you. And one little comment I need to make here in my concluding remarks: we have to also promote the practice of cost audits in our organization, so that the auditors will give assurance to the boards and other stakeholders that the cost accounting information has been prepared according to the internationally accepted cost accounting standards, and our own cost accounting standards are in line with the internationally accepted cost accounting standards. So I think it's a very proud moment, Professor. You have worked on this subject for so long. You are very passionate about this, and I think the way forward for these standards is to get the government to recognize this, the government to implement through gazetting this standard, so that this will become mandatory. And also, Professor, I also think that the people, corporate sector, and our stakeholders should not look at this exercise as another cost adding exercise. Because sometimes when we say, okay, let's do cost audits, the organizations might think, my God, we have to pay a cost auditor. But I think what we have to impress upon our wider society is that the benefits of cost audits will far outweigh the cost of cost audits. So I think with that thought, I wish to conclude, and I wish you a very successful session, a very insightful session, and I am sure you will be able to, with this information, you will be able to create a wider awareness in the society and also wider conversation in the society. That this exercise is fruitful, this exercise is beneficial. It is not only beneficial to the corporate sector, but it is beneficial to Sri Lanka as a country and the Sri Lankan nation. Thank you very much. I wish you a very fruitful and a productive session.
Thank you so much, sir, for that informative presentation and for giving us a better understanding of the standard setting process. So next, we come to the main technical session of today's webinar. The session will focus on the overview and benefits of the standards, their practical use, cost sheets, and their applications, preparation of cost sheets, and the facilitatory role of CMA Sri Lanka. We are privileged to have three distinguished professionals joining us for this session. Dr. Mangala Fonseca, Consultant CMA Sri Lanka, Mr. Ruchira Pereira, Expert Panel Member, Dr. Tyrell Roche, Expert Panel Member. It is certainly a valuable panel of expertise, and I'm sure participants will gain practical knowledge and insights that can be applied in their professional environment. Over to you, sir.
Thank you. Thank you, Lakshika. Professor Lakshman Arwatwala, Mr. Mahendra Jayasekara, my colleagues Tyrell and Ruchira, dear friends. We are now going into the core of this webinar. Well, let us start at the very beginning. I think even if you have a notion of what we are going to talk about, it is good to set the ground so that we will all be conversing in the same way, understanding in the same way about standards. Therefore, we are going to the beginning and asking this question: what are cost accounting standards and why? Simply said, cost accounting standards are a set of rules. That is a set of guidelines that we have to apply in ascertaining the cost of products or services. Rules and guidelines. Now, there is a critical term, important term here, cost. Now, what do we mean by cost? It's the value of resources in its development. Well, when you say resources, it can be material, labor, and expenses. That is the three aspects that is covered by resources. So the resources, how do we value? How do we determine resources? Cost. Well, some people might think we all calculate costs in our companies, in our day-to-day, in our workstations, even in our personal lives. Now, some might think that they do the right thing and they are doing the best thing possible. We ascertain them correctly. For some, it will be convenience. We have been doing like this all the time. So we continue. And there can also be a minority who will be thinking of it as some kind of way of manipulating a minority. So therefore, this costing that we do day in and day out in our organizations in various guises is driven by different motives. This which leads to lack of uniformity and consistency in the ways that costs are computed within a given entity over time. Say last year, this year, next year, we might change the way we calculate costs. As well as across entities, you will find that there is no uniformity, same way and continue in the same way. So what does this lead to? This leads to large deviations. Why does this happen? Because there are large deviations in the definitions and methods used in this costing process. Large deviations in the definitions and methods used in the costing process. The same organization over time will be deviating, and different organizations obviously will be having different ways of defining and different methods of computing. So all this leads to distorted costs. Therefore, we can't compare costs within an entity. Even within an entity, we cannot compare costs, let alone against other organizations. So we do not speak in a common language. We have various different incomparable set of values we have. But when it comes to sending cost figures to various organizations, we do that. But then they will also be understanding them in different ways. Therefore, it is one big mess. Well, within an organization, it leads to ineffective decision making, isn't it? When costs are distorted, obviously they lead to ineffective decision making with adverse consequences at entity, sectoral, and national level. Well, this is seen, this is obvious, this is something that has to be handled, managed, tackled. Therefore, the answer, the solution would be to introduce a set of rules or guidelines that brings uniformity and consistency to the way cost of products or services are computed. So that is the purpose of our standards. Now, let me also tell this, that there is no ideal, best, perfect cost. Although we may be constantly working towards deriving more accurate, better costs, we will never reach there. As you know, over time, we have been using long ago single absorption rates, followed by multiple absorption rates. Then came ABC, then came time-driven ABC, then came target costs. So we thought that we are continuing, we are getting better and better, more and more accurate figures. That is true. But can we go towards more and more accuracy without a stop, reaching the ideal? Because I don't think it's possible, because there are inherent constraints against deep analysis. Because when we want a greater accuracy, greater additional accuracy, it involves additional costs of computation, labor, IT-wise, whatever. So therefore, you have to balance the cost against the benefit. So we might think that further analysis is not worth the investment that we get to have a better, more accurate figure. But let that be. Well, as at present, we are faced with a high level of inaccuracy in our computations. So, staying where we are, we can achieve much, we can do much if all of us come together and do our computations in a similar way according to a set of rules and guidelines that are stipulated after careful thought, so that the figures that we have will be comparable and we will be speaking in the same language. So that is what I meant by what are cost standards and why. I'm sure you will appreciate that what we do at present most of the time, what we get, what we have, what the figures that we try to compare are really incomparable. So benefits applying to CAS. This was mentioned previously also by both speakers. Just to run through. It enables comparison of costs of an entity over time periods and comparable products. So comparison is possible within the organization over time as well as against comparable products. Offers a uniform and consistent approach to measure, assign and allocate costs of SBUs, entities and industries, which makes comparison possible. Now that case of the electricity was discussed, well, if we can calculate that cost of a unit of electricity prudently, reasonably, in an acceptable manner, then that will have large manifestation, a big impact on the other industries because they are the input for that industry. Same with other public goods such as transportation and petroleum products like that. So therefore, they are all interconnected. What we do in at national level, public sector, will have large implications, considerable implications on the sectors as well as individual companies. So cost statements that we prepare based on standards, based on the same set of rules applied by everyone, will support effective internal special decision-making situations, including pricing, whether to manufacture a product or buy that, to close down a product like that. There are so many internal decision-making that we can do in a very prudent manner if we have cost statements based on standards. Finally, it facilitates meeting demands by external agencies such as these public sector organizations with whom we have constant dialogue, we have interactions. So their requirements can be met in a very consistent manner if we abide by a set of cost standards. So these are just 4 benefits that accrue to us, that come to us through application of cost standards. Simply said, we want to ascertain acceptable total cost of production or service and unit cost of production or service. That is what we want ultimately to ascertain an acceptable total cost of production, reasonable cost of production or service, and also a unit cost of production or service. How? Through use of appropriate specimen cost sheets of the right breadth and depth, and completing the cost sheet, that is different cost items, according to the rules stipulated in the cost accounting standards, which results in more accurate and comparable costs. So, first line is our objective, through which we get through appropriate specimen cost sheets, which is the heart, which is the core of this exercise. We all should have in our organizations. I know that you have cost sheets. Well, you make use of cost sheets. Now, it should be, is it of the right breadth and depth? That is something that we have to determine. But that cost sheet we have, which we fill using what is stated. Now that cost sheet consists of cost items, which we fill using rules stipulated in the cost accounting standards, so that we end up with more accurate and comparable costs. This, I suppose, is really the mechanism through which we make use of cost accounting standards. The objective and the means are listed here. Going to our standards, cost accounting standards of Sri Lanka book, we began there with the introduction, and then we came to tier 1, the conceptual foundation, which appears in section 2, which gives 6 norms, values underlying the cost accounting system. Well, you will have to operate a cost accounting system, and the norms that underlie the cost accounting system are given in the conceptual framework foundation. And on that, we have generally accepted cost accounting principles. That is section 3. It's building on tier 1. So that is the framework of rules, models, and practices. And then comes tier 3, cost accounting standards, 1 up to 22 with some missing, so that we have 19 in all. That is section 4, 19 specific standards. And of course, tier 4, we have the cost sheet. That is, we apply the standards on the cost sheet, and we arrive at total cost and unit costs. That's section 5. So the specimen on which cost accounting standards will be applied. So at the same time, we will be working within the implementation framework that is available in section 6. So that's an outline of our book that I presented. You may have come across or gone through the book, even the e-version was made available at the launch. I hope you may have gone through that, but that is the build-up of the book. If you go to each standard, every standard follows a predictable, highly structured format. Finance teams should focus heavily on these 5 operational components. We begin in each standard, we have the definitions. Establishes the exact terminology. Example, distinguishing normal capacity from actual capacity utilization, like that. We have the definitions given. Then we have principles of measurement, that is the rules for valuing the cost. Examples including freight inward, handling abnormal scrap, and all that. We come to assignment of costs, how to trace or allocate the cost to the final cost sheet. Example, cost and effect versus benefits received. And fourth, presentation, how the cost must appear on the cost statement. And finally, we have disclosures, required transparency notes, stating the basis of valuation, highlighting abnormal costs, etc. The scope of cost accounting standards of Sri Lanka, 19 standards are categorized in this manner. We have cost inputs and direct costs. So these CSSL 6, 7, 8, 9, and 10. Material cost, employee cost, cost of utilities, packing material cost, and direct expenses come under co-inputs and direct costs. That is one type of, one category of standards. Then secondly, we have overheads and capital. Under that, we have 3, 11, 15, 16, and 17. Production and operation overheads, administrative overheads, selling and distribution cost, depreciation and amortization cost, and interest and financing charges. And finally, the rest we have under specialized operations. Those are classification of costs, capacity determination, repairs and maintenance, cost of service cost center, pollution control cost, joint cost, royalty and technical know-how, quality control, and manufacturing costs. That is the categorization of standards into 3 types: co-inputs and direct costs, overheads and capital, and specialized operations. So just to tell you that this book is available in the e-form. If you do not have a copy, you can request Ms. Rashmi Prematilaka, whose email address and contact numbers are given at the end of the slideshow. Or you can even purchase a copy. It's priced at rupees 1,500 from the Secretariat here in Colombo. And before I hand you over to Ruchira, I will just introduce the cost sheet because it's the core on which you insert the costs using the standards. It's a detailed specimen form that gives the buildup of the total cost and the unit cost, industry specific. At the moment, we have the cost sheet developed only for the manufacturing sector, and we are now working on the apparel sector and the plantation sector, but we will go into other sectors also pretty soon. Historical, the cost sheet can be historical, past event, post event, or pre-event, because we can have the cost sheet on what happened or what we estimate the cost to be. So both types of cost sheets are available, are possible. Consecutive accumulation of cost components in logical order is what we do. There are value-adding columns and report disclosures which you can add, as you will note in the cost sheet that is presented to you, and can be tailored to align with different user requirements, and time span is situational, depending on the type of costing that you do, whether it's job, batch, or whether it's process, control, continuous. Well, the time span, for how long do you compute, that will be dependent. And finally, you will, of course, have a reconciliation done between the profit statements and the cost statements. So from that point onwards, it will be handled, the presentation will be handled by Mr. Ruchira Pereira, followed by Dr. Tiral Roach. Thank you.
Professor, can I continue?
Yes, Ruchira, you can take it from
Yes.
here.
Okay. Sorry. Thank you very much, Professor Vatawala, President of CMA Sri Lanka, Mr. Mahendra Jayasekara, Chairman of the Cost Accounting Standards Committee, and also for my fellow panel members. So from here on, let me take you through the cost sheet as to how to develop the cost sheet and also on the specific things that you need to be careful about when you're developing the cost sheet. So I would say this is the heart of the entire process, generating the cost sheet. Now, if you look at this slide, the process is actually quite simple. I'm referring to this slide. So as we know, every manufacturing company already has a lot of information. We have ERP data, we have information from our ledger, we have employee timesheets, material requisitions, we know our production, and also we know our expenses. So, but having all this information does not actually mean or does not automatically mean that we know the correct cost of our product. We have everything together, but having all this information, does it actually mean that we know our true cost of production? Now, let me take a very simple example. Imagine that we manufacture bottled mango juice. It's a very simple example. We know how much we paid for mangoes. We know the cost of sugar, cost of bottles. We know how much we are paying for our employees, electricity bill, and all other expenses we know from our system. But adding all these expenses, can we get the cost of our mango juice? Not necessarily. Why? Because we need to answer some important questions. We need to say actually out of all these costs, which costs belong to the product? How should these costs be measured? And how should shared costs be allocated between different products? Now, I would say this is where CASSL comes in. Think of CASSL as the engine in the middle. We put our accounting data, operating information into this system. We apply proper measurement rules, allocation principles, and what comes out? The cost sheet. The cost sheet then builds the cost step by step. We first calculate our prime cost or direct cost, as we all know. Then we calculate factory cost, cost of production, and eventually we calculate total cost of sales. As we know, this information is useful for two major purposes. First, for internal management decisions. These are simple management decisions, such as should we manufacture or buy from someone else? Should we use our factory capacity efficiently? Are we charging the correct price? These are simple management decisions. This information are also required by external parties, such as customs, regulators, and also other government authorities. So the important message is this. Cost sheet converts raw accounting data into meaningful information that people can actually use. Can we move to the second slide? Right. Now let us see how we actually build the cost sheet. Again, let me take the same example regarding mango juice. Suppose we manufacture 10,000 bottles of mango juice. As I have told you, we can capture direct cost or prime cost. For that, we need mangoes, we need sugar, we need bottles. We can take the direct employee cost, and we can add other expenses that directly relate to manufacturing. So suppose our material cost is 500,000, labor cost is 200,000, and direct expenses are 50,000. So 500,000, 200,000, 50,000, this gives us a total prime cost of 750,000. This is simple enough. As management accountants, we all know how to calculate the prime cost. But now comes an important principle. We should not automatically include every expense that happens in the factory. Now, what does it mean? Let me give you an interesting example. Imagine that one day our cold storage system breaks down. In the factory, our cold storage system breaks down. Because of that, a large quantity of mangoes is destroyed. Now, what is this? Our storage system broke down, and as a result, we lost some mangoes. Now, it's an abnormal cost. Now, the question is, should we consider this abnormal cost when we calculate the total cost of production? Answer is no. We should not take this abnormal cost because it is not part of our normal operations. It's an inefficiency. So we need to identify abnormal cost properly. If we don't identify abnormal cost properly, we risk the danger of including abnormal cost or abnormal losses into our cost of production and overpricing or overcosting our products. Now, that is a danger that we should avoid at all costs. We should not consider abnormal losses as part of our cost of production. It's an internal failure, it's an inefficiency. So that should be addressed separately. So we have utilities, packet, electricity, water, all other resources. So where it is practical, we should trace all these costs to the products that actually use them. Now, another interesting thing is, okay, how should we allocate? How should we allocate between different product lines? Now, say, for example, we have two product lines, line A and line B. So the question comes, okay, should we divide? Should we divide the total, let's say, electricity cost? Should we divide the total electricity cost equally between both lines, line A and line B, saying allocating 50% for both lines? Again, the answer is no. That will not give us a fair product cost. Allocation should reflect the actual consumption of resources, like in ABC. Professor earlier mentioned about the application of ABC. Yes, this is an instance where we can apply the principles of ABC. Also, when it comes to production overheads, such as factory supervision, maintenance, depreciation, service center cost, we can apply the same cause and effect basis, the same logic of cause and effect basis. We have to ask the question, what is actually causing the cost? Like in ABC, this is what we do in ABC. In ABC, we calculate different activity rates. So how are we calculating activity rates? For each activity cost, we need to identify an activity driver. So we are asking the same question, which driver or which activity or which driver or what is actually driving these costs, or what is the cost driver for this particular activity? Right. So let me explain about the capacity and work in progress. We have to consider capacity, and also we need to consider work in progress. Now, what is meant by this? This is important because we do not want unusually low production to artificially increase the cost of everything that we manufacture. And finally, we add the relevant administration and selling costs to arrive at the appropriate total cost. So all these are different cost components. All these are different cost components that we need to add in order to arrive at the correct product cost. If we don't arrive at the correct product cost, then as I have mentioned earlier, there is overcosting and overpricing of our products. Then of course, it will lead to wrong management decisions, and also we will be giving wrong information for external regulators. So the main message from this slide is a cost sheet is not simply adding expenses. We are measuring cost, we are classifying cost, and assigning cost in a logical and consistent way. Right. Now in the next slide, you can see the actual structure of the cost sheet. Right. So here, I don't want to go through every single line. We all are management accountants, so we know exactly what each of these, what is meant by each of these lines. So I don't want to go through every single line here. Instead, I want you to look at the logic. Think of the cost sheet like a staircase. We start with direct materials, direct labor, direct expenses, and together we calculate the prime cost. Then we add the appropriate overheads, and we move towards factory costs, as I have mentioned earlier, cost of production, and eventually total cost of sales. So we are building the cost one level at a time. Now imagine after doing all this, our total production cost is 1 million rupees. So if you are manufacturing 10,000 bottles, very simply, our production cost is approximately 100 rupees per bottle. 1 million divided by 10,000. Now that number becomes meaningful. If we are selling 150, so if we are selling each bottle for 150 rupees, now we have one situation. Now, if you are selling each bottle for 150 rupees, whereas our cost is 100, then of course, we are in the safe side, we can make a profit. But if you are selling without knowing the correct cost, if you are selling each bottle for 95 rupees, then we are making a loss. Then immediately, we should alert the management. Management needs to ask, are we charging the wrong price? Or are our manufacturing costs too high? Or is there an inefficiency somewhere in the production process? Now, that is why the cost sheet should never be viewed as simply another finance report. It is not another finance report. It's a very important tool. It is something from which we should make management decisions. More importantly, for costing and pricing. if we can prepare our cost sheet correctly, we can calculate our reduction cost. And based on that, we can take proper decisions when it comes to pricing. Now we have another practical question. Next slide, please. So we have to ask ourselves, how many cost sheets do we need to prepare? Should a company prepare one cost sheet? There is no single answer for every organization. It depends on how the company manufactures its products. Now, if you take a cement company where the production is continuous, the product is relatively homogeneous. So if the production is continuous, then of course we can have one cost sheet, a periodic cost sheet, perhaps monthly or quarterly. Now compare that with an apparel manufacturer. Now for simplicity, let's take an apparel manufacturer who's producing t-shirts and jackets. Let us assume that this manufacturer is producing 10,000 t-shirts and 2,000 jackets. Now, such a company, they're using different materials for different products. They have different labor requirements, different production times, different costs. So if we combine, everything into one cost sheet, we may lose very important information. Therefore, what we need to do, for an organization such as an apparel company, where they are manufacturing different batches, we need separate cost sheets. We need separate cost sheets for different batches or for different production lines. Now consider customized manufacturing. Imagine a company manufacturing specialized machinery. Now each customer wants, now you are getting jobs. You are getting jobs from different customers. So each customer wants something different, different design, different materials, different labor hours, different specifications. In that case, each customer order needs its own cost sheet. And there's a very important reason for this. We want to avoid something called cross-subsidization. What do you mean by cross-subsidization? Now, say for example, there's a particular product which actually costs 80 rupees. And there's another product which costs 150 rupees. So one product costs 80, the other product costs 150. So what will happen if we take the average of these two, 80 plus 50, 230, if we divide by 2, it will give us an average production cost of 115 rupees. So if we take our average production cost as 115 rupees, then we are not fair for product A. Why? Because the actual cost of A is only 80, whereas we are taking the actual cost as 115. So we are unfair to A, whereas we are giving a benefit to B, which is not proper. So we need to prepare enough separate cost sheets. The idea is, or the bottom line is, we need to prepare, the message is to prepare enough cost sheets to understand the true economics of the products we manufacture. Now let us say we have completed the cost sheet. And I tell you the cost of one bottle is 100 rupees, as I have taken the same example which I took earlier, 1 million rupees divided by 10,000 bottles. So the cost of one bottle is 100. So you may reasonably ask me, how did you get 100 rupees? And that question is extremely important. Because the credible costing system should be able to explain the number. First, we need to state the basis of valuation. So can I move to the next sheet? Can I move
discuss? No, Rich, I think you should go to the next one.
Next sheet.
Wow.
All right, okay. So the question is, how did we value our materials? How did we allocate our overheads? What methods did we use? Second, where relevant, we should show the quantity and the rate. For example, instead of simply saying, mangoes cost me 500,000 rupees, we could say 10,000 kilograms of mangoes at 50 rupees per kilogram equals 500,000 rupees. Basically, we are giving more information about the total cost rather than saying, okay, the total cost is this much. We have to give specific cost information. Okay, we have used 10,000 kilograms of mangoes at 50 rupees. So that is how this 500,000 came. Now, this information is very useful. So someone can look at it and ask, was the quantity reasonable? Was the price reasonable? So did we use too much material? Did the purchase price increase? That gives us much better control. Now, these are the questions the management would ask based on the costing information. That is why we have to give this detailed information, especially for internal decision making. We also need to disclose important exclusions. Our abnormal cost I have explained earlier. So if there are abnormal costs, if there are penalties, if there are non-operational costs, all these costs we need to exclude. That has to be very clear. Related party transactions should be identified. And the very important issue is the changes in policy. So if the policy has changed, now we know companies can change its accounting policies. Not always, but then again, some companies can change the accounting policy. So if a policy has changed, so we should see the impact of that policy change to our costing and pricing. Suppose last year, we allocated factory overhead using labor hours. But this year, we are changing the basis to machine hours. So definitely, there will be a difference in the cost. The cost of individual products may change. The total overhead may not change, but cost of individual products may change. So anyone comparing the 2 years need to know that. Otherwise, it is not fair. Because in 1 year, you have used labor hours as the absorption basis, and in the other year, you are using machine hours. So if you are using 2 different allocation bases, then of course you can't compare the cost of 2 different years. So the key message is transparency and traceability. All this information has to be provided. Another competent person should be able to follow the information and understand as to how we have arrived at the final cost. Now, another question. Next slide, please. How much detail do we actually need? Yeah. How much detail do we actually need? Do we always need a highly detailed cost sheet? The answer is no. It depends. It depends on who is using the information, why they need it. Now, let me give an interesting example. Think about this as Google Maps. We all know what Google Maps are. If I simply want to know how to travel from one city to another, what I do, I use the wider view. Now, say for example, if we want to move from, let's say, from one city, let's say from Kottawa to Ratmalan or to Kottawa to Mount Lavinia, I will use the wider view. I don't need to see every little road and every building. But when I get close to my destination, then I zoom in. Cost information works in much the same way. It works in much the same way. A basic cost sheet gives us the bigger picture. Direct materials, direct labor, overhead, total cost, unit cost. That may be enough for the board of directors, senior management, or some external stakeholders. But imagine if you are the factory manager. For the factory manager, you are telling, okay, total overhead is 10 million rupees. Is that enough? No. He may want additional information. He may want to know how much was the electricity cost, how much was the maintenance cost, which production line used it, how much scrap did we have, where are we wasting resources, which cost center is causing the problem, what are fixed costs, what are variable costs. Now for that, you need the detailed cost sheet. So it depends. The universal answer is, straightforward answer is, everybody doesn't need the same cost information. Some people is satisfied with broader information, but for some people, you need to give detailed cost information. So think of it in this way. Senior management might need the helicopter view. Operational management needs to zoom into the factory floor. The important point is, more detail is not automatically better. The right level of detail depends on the purpose. Right. Now, cost information is not useful only for internal management. A good cost sheet can also support different external stakeholders. Can I move to the next slide? Yeah. A good cost sheet can also support different external parties like customs, regulators, etc. Now, this is where the modular nature of the cost sheet becomes very useful. Different authorities may want different information. Now, customs may want some information. Inland Revenue Department might want some other information, like transfer pricing. Consumer Affairs Authority may want transparent input cost, particularly when looking at regulated pricing, price ceilings. Department of Commerce may require information relating to value addition, origin of materials, trade agreements, etc. Now imagine, every time one of these authorities asks for information, the finance department has to start the costing exercise again. So every time one person is asking, should you do the same thing again and again? That will be extremely inefficient. Now this is where you need to have a strong cost information sheet. Instead, what you can have is you can develop one strong, detailed, and reliable costing system. And from that system, you can extract relevant information for different users. Customs may need one section, IRD might need another section, Consumer Affairs Authority might need something else. For different authorities, for different purposes, you should be able to extract information from your centralized cost information system. So the idea is this: there is no need to develop different costing systems. You have to develop one reliable system that can serve multiple purposes. Now, also there's a major practical benefit of a properly designed cost sheet. Now, somebody may ask, we already prepare audited financial statements. Now, Mr. Mahendra also mentioned about this. So why do we need another cost statement? So if we have the financial statements, if we are producing the audited financial statements, why should we give another cost statement? It's a fair question. The reason is this: the two serve different purposes. Financial statements tell us about the overall financial performance and financial position of the organization. These are primarily designed for external reporting. Cost sheet has a different emphasis. It looks at operational reality. It helps management understand what products are costing, why they are costing, and where costs can be controlled, where your costs are rising, and how you can control your cost. Now, these are the things to which we are trying to find answers from the cost sheet. Financial accounting again tells us what happened to the company. Cost accounting helps us to understand what is happening inside the company. So these are some differences between the two branches of accounting: financial accounting and management accounting. Let me give you an example. Our financial statements may tell us electricity expense for the year 12 million rupees. It is a useful information. Okay, total electricity bill is 12 million rupees. But imagine if you are the floor manager, production manager, then you may want to know, out of that 12 million, how much was the electricity for product A? How much is the electricity for product B? Or how much of electricity was consumed by A? How much was consumed by B? Which production line is using more electricity? Why did electricity cost per unit increase this year? So these are some of the basic things that he may want to know as a layman. He's not a finance person, so these are the questions that he may be having. Now, that is the type of information we have to get from the cost accounting system. Because financial accounting and cost accounting serve different purposes, there can sometimes be differences. Therefore, we need a reconciliation. Think of reconciliation as a bridge. I know there can sometimes be differences between financial accounting and management accounting. So you have to reconcile certain things. So think of reconciliation as a bridge. Can I move to the next slide? On one side, we have the result from the cost records. On the other side, we have the result from the financial statements. The reconciliation is important to explain why there are differences and connects the two. This is extremely important for transparency and credibility. Okay, can I move to the next slide? So now we come to a particularly important standard for the manufacturing sector, CASSL 22, manufacturing cost. Right. So I would simplify this standard into one basic question. So this is how I'm going to simplify the standard. What is the proper manufacturing cost of the goods that we produce? That is what we are going to answer through this standard. It sounds like a very simple question, but as we have already seen, answering it properly requires several decisions. In CASSL 22, therefore deals with classification, measurement, assignment, presentation, and disclosure. Let me explain these terms very simply. Now, as for classification, it is asking basically, okay, what type of cost is this? Okay, what is the type of this cost? Is it material? Is it labor, factory overhead, or something else? Measurement task, how much of that cost should be recognized? Assignment task, where should that cost go? To which product, to which process, to which cost center? And finally, presentation and disclosure asks, should we report that cost and what additional information should we explain? Let us take a numerical example. Electricity bill, let's assume 100,000 rupees. Classification asks, what type of cost is this? Measurement task, okay, we know it's overhead. Measurement task, what amount should be included? Assignment task, how much should go to A, how much should go to B? And presentation tells us how that cost should appear in the cost statement. The overall objective is uniformity and consistency. Because if every manufacturer calculates the same type of cost in a completely different way, comparison becomes extremely difficult. So CASSL 22 provides a common discipline for determining manufacturing cost. Finally, next slide. Finally, let us bring everything together. Let us return to our bottle of mango juice. Someone now asks us what is the manufacturing cost of this bottle. So we should now understand that we cannot simply take all the expenses together and say, okay, this is all the expenses together, divide by the volume and say this is the cost per bottle. We need to build the cost properly. We have to start with materials, which are mangoes, sugar, which are mangoes and sugar, bottle, and the appropriate manufacturing inputs. Then we need to add all other overheads, including labor cost, overheads, supervision, maintenance, utilities, etc., etc. And where necessary, we have to use a proper allocation basis in order to allocate the overheads and divide by our capacity. Now, when it comes to capacity, now the standard clearly says how you need to take the capacity. When you are taking the capacity, you have to take the higher of your, when you are taking the capacity as an allocation base, okay, it says basically you need to take the higher of the capacity or your actual utilization, higher of. Because sometimes what will happen if your utilization is low, then of course, if you use that utilization in order to calculate the cost per unit, then the cost per unit would increase because of your inefficiency. Your utilization was low because you were inefficient. So if you use that utilization in order to calculate the unit cost, then the cost per unit will increase. So in order to prevent that, the standard clearly says, okay, when you are taking the capacity, you should take the higher of the original capacity or the utilization, which means if you were efficient and if you have used, let's say, more hours than the budgeted hours or the capacity, then the actual utilization should be taken when you are calculating the unit cost. So abnormal costs should not be considered because abnormal costs are basically abnormal costs are resulting due to inefficient operations. So inefficiencies should not be taken into account. Inefficiencies should be left out. Finally, we have to arrive at a manufacturing cost that can be supported and explained. This is the main point of CASSL 22. The purpose is not simply to produce a number. Anyone can produce a number, but the purpose is to produce a number that we can defend. So if management asks, why does this product cost 100? We should be able to explain it. If an auditor asks, we should be able to provide evidence. If a regulator asks, we should be able to show the basis of our calculations. And if we calculate the same cost next year, we should apply consistent principles so that the comparison becomes meaningful. So ultimately, CASSL is creating discipline, consistency, transparency, traceability. And if we calculate our manufacturing cost in this way, then I would say we can properly calculate our true manufacturing cost that we can defend with any authority. So let me ask one final question. We need to ask one final question. So let me explain that as well. If I tell you that one bottle costs 100, what evidence do I have to prove that number? Can I trace the materials, trace the trace the quantities? Can I trace the labor? Can I trace the utilities? Can I explain how overhead was allocated? And can somebody independently verify what I have done? So this is what actually we should do from our cost accounting standard or CASSL 22. So this is a very important area because whatever that we do, whichever the cost that we include in our cost of production calculation, we should be able to prove. We should be able to justify. So if we can justify, then that justification can be used even when there is a cost audit. Mr. Mahendra has explained earlier that we should extend this to cost audits in the future. Yes, even when there is a cost audit, and even if an audit asks, okay, how did you arrive at this cost of a product or cost of a unit, we should be able to explain through justification. We should not, primarily, we should not include abnormal cost. Even I had a doubt earlier, okay, why we should not take abnormal cost into the cost of production, but the answer is very simple. Abnormal cost should not be taken because abnormal costs are not part of the operations. It was not something planned for. Abnormal costs are there because you were inefficient. So if you were inefficient and if there are abnormal costs as a result, then those costs should not be included in your cost of production calculation. So with this, I would like to wind up CASSL 22 detailed cost sheet explanation. Over to you, Tiril.
Thank you, Ruchira. Can I go to the next slide? So, ladies and gentlemen, without further ado, both Dr. Mangal and Mr. Ruchira spoke on the technical side of the standards. What I will focus is on the practical side or the back office side of the standards. As Professor Watavala said earlier, and which was supported by Mr. Jayasekara, one is we need to have cost records. Cost records to show the auditor if there is an audit or if there is a verification of the cost statement, where did they get this information from? So for practically to get a good cost sheet and have good cost standard practice, you need to keep cost records in your organization. So you need volume-based quantitative information to be maintained for every single item that you produce, SKU-wise, plus HSN, that means to HSN level. HS means the harmonic system code. To 8-digit level, you need to maintain cost records. Then each stock keeping unit wise, you need to have cost records. That means how did you get the cost of a unit and how did you apportion it? From where did you get it? So it's like doing a financial audit. When you go through vouchers and supporting documents, you must be able to show if an auditor comes or if there's a verification of your cost statement, the cost sheet, that you must be sure that these are the areas that I got it from. So then ensure exact detailed itemization of expenditures across all production factors. So there must be a clear cost accounting methodology that you use that you can show to the auditor. So that is the job of the cost accountant. So you are now, I assume that you are a cost accountant of the organization who wants to develop a cost sheet or a cost statement according to the standards. Then you must be able to prove to the auditor, these are the way that I got my details and these are how I have itemized to expenditures. And you must establish a comprehensive physical and digital trail, that means audit trail that backs up every single element. So the auditor must be able to go through your ERP system or your physical system and trace how you got this and verify that. So if you are going to have a good digital system, you have to develop your ERP also for that. Most of the ERPs now, they don't use the cost accounting module. So if you are going to practically efficiently utilize this, I think you will need to develop your ERP system or you must have a very good digital system to support these documents. Can I go to the next slide, please? So in addition to that, if you are having overheads, if you are distributing overheads, there must be a clear split in the records that you keep. So factory overheads are only for the factory. Then admin overheads are anything other than the factory relating to head office, administration and everything that you have a portion to the goods and services as Mr. Ruchira explained. Then selling expenses are connected with marketing, customer acquisition. So there must be a clear split of all these overheads in your detailed cost sheet that you can utilize. Then all, as we earlier described, all cost accounting records must ultimately culminate in a final template that reconciles the calculated profits and the audited financial ledgers. So, so this bridge establishes a consistency between the cost sheets and the profit and loss statement. And if there are any isolated items, those should be reported separately, and there should be data to prove it to the verifying cost auditor. Can I go to the next slide, please? So now Mr. Jayasekara pointed out the importance of having a cost audit. That is what we are trying to bring in. Presently, I don't think that much cost audits happen in companies, but if you all are practicing giving free trade agreement statements to Department of Commerce, you will see that some of these statements have to be signed by a chartered accountant. So in future, when these statements or when these things become legalized, those documents actually have to be verified and signed. To do that verification, you need to have cost records, the digital and the physical audit trail and everything. So to do this audit, there must be qualified auditors, CMA members who have sector experience and who are trained and experienced in auditing. Audit firms also can do this who are registered with CMSL. There can be foreign expertise for complex and overseas assignments, which we need to bring auditors from overseas. Then, if you are working with the Consumer Authority, the Department of Commerce, Inland Revenue, Excise, they will need specific formats, so we need to follow that protocols. And all auditors must be updated with not only cost accounting standards, but the Sri Lanka accounting standards, the financial reporting standards, and the newly coming sustainable standards, because there could be reconciliations that needs to be done between these standards. Can I go to the next slide, please? So to implement this in the organization, first you have to plan. I assume that most of these organizations have a very good cost accounting system, but when you're going to the cost accounting standards implementation, you need to have clear objectives of your cost accounting exercise, whether you want to get better good pricing or cost control, and there must be an end-to-end mapping of processes. Including interfaces using departments, support finances, overseas branches and everything, then only you can have a very good cost record system and show the auditor or the people who are verifying it. So then you have to have good cost centers, segregate the plant into production, or if you have a complex organization, which cost center, if you are especially apparel, there is R&D, there is marketing, there is overseas development. So you must be able to identify cost centers and do it on this thing on the organization. Then align your chart of accounts, cost codes and source documents with the cost accounting system, and especially ERP and documents have to have traceability. So ERP development will be a very critical importance in this, because if you are using the cost accounting module, you will need a lot of new way to get this cost sheet, new elements coming in to the cost accounting module. So in a way, this will help you to develop your ERP also. I know SAP and Oracle and all those main ERPs have this, but most people are not utilizing it. But if you are developing in-house ones and smaller ones, I think you can do patches and get these to run on your systems if you know the theory very well. That is the phase one of planning to get these standards into your organization. Can I go to the next slide? And phase two is the execution. Collect the cost data and validate its completeness and accuracy before processing. Assign direct costs and accumulate indirect costs into appropriate cost centers. Apply the approved basis for distribution, apportionment, absorption correctly. Apply, now if you are using unit cost, then you have to apply in one way. If you are using job costing, it's another way. If you are using batch costing, it will be another way, and process costing will be another way. So you must be able to apply it. For that, you will need expertise in your organization. Then you need cost records to be kept in the prescribed formats and audit traceability for verification. And you have to prepare detailed cost sheets as given in the standards. And we have given the specimens in standards. So we are talking about manufacturing sector today. So especially CA SSL 22 formats you have to follow. Thank you. Can you go to the next slide? So if you are in need of training to your finance team or the cost accounting team, you need to have a mindset shift from mostly we are in an external financial accounting mindset to an internal managerial costing mindset. So it's a shift in the paradigm, shift in the mindset. Then you need technical familiarity. You need training on the use of cost accounting standards, how to use these standards, how, as Ruchira said, how to treat abnormal idle time, how to separate applied and unapplied capacity. And you especially need system integration, how to integrate this new data, how to get it from the ERP. Maybe you will have to you have to purchase modules, or you need to do patches. And you have to do the cost driver analysis, educating staff on cause and effect analysis. How does cost get reflected in your organization and in your systems? Can I go to the next slide? So what assistance that CMA Sri Lanka can give? We can give you transition support, providing an adjustment period and advice for companies to align their system. We can give training support, conducting dedicated workshop and seminars, which we are doing regularly. But if you need specialized one for your sector organization, we can do. And we are publishing detailed guideline notes from time to time. We can provide advisory services, providing individual assistance for needy companies. And we will be doing post-implementation review, whether the standards have met the original objective of implementing them for the manufacturing sector, and the standards are practical and effective, and whether there are changes necessary. Can I go to the next slide, please? So the next steps in the standard is, as at now, we are in public consultation and deliberation. That means you can voluntarily adapt. So we are working with auditors, regulators, companies, and through webinars like this, public discussion to get what the standards and what their thoughts on that. Then after that, the next step will be legalization. That means statutory incorporation and gazetting the standards as a part of the Companies Act. So then companies have to use it. Then we will go to regulatory integration, where the Public Utilities Commission of Sri Lanka, Consumer Affairs, Inland Revenue, Department of Commerce, those people will use these standards when they are requesting statements, and excise departments when they want to check if you are an excisable good, then they will require statements in the prescribed format. And of course, the Treasury also on subsidies, when they want to give subsidies, if they want to have price ceilings, price floors, and compliance, when they need statements, this will become the standard on operation. Can I go to the next slide, please? So that's all on the presentation, but we need your feedback. And if you need our feedback, there is a Q&A session after these presentations finishes, so you can join us and ask, or you can email us, send us a letter, or telephone us to CMA Sri Lanka. They will route you to the necessary departments and get you that information. Or you can directly contact the presenters here on email, WhatsApp and all is given, so you can ask them. We will support you and participate. Invite you to participate in the CAS session, webinars, workshop that you are planned. Today is for manufacturing sector, and there are about 7 or 8 other sectors we have planned. Join for that, and there are other workshops that you are planned to develop this. So join them, and you will get that information. And the next slide, please. So that's all from the 3 of us. Thank you very much. The details are here. You can contact the CMA Cell Secretariat if you need any information, or contact us. We're willing to support you and help you in your cost accounting application journey in your company. Wish you all the best. Thank you, and we'll go to the next speech, Rashika.
Thank you so
I
much,
think
sir.
there are some questions. There is one question. I think We must thank Dr. Brendan for that very exhaustive explanation together with Mr. Ruchira and of course Dr. Mangala, who have done extremely well. I'll just read this question. It is from Junaid Tamil. I'm joining from overseas. Doctor, could you explain how cost accounting standards should be applied to a joint cost and overhead allocation in multi-state manufacturing, particularly where byproducts and waste recovery materially affect cost structures? Also, what evidence does the regulator typically require to validate these allocations during cost audits? So, I don't know whether Professor Mangal Fonseca, you want to take it or any of the colleagues would like to handle it?
I think either Ruchira or Dr.
I, uh,
Kiran.
I will, I
Yes.
will take it. If it's between states, there will be, if you take I am referring you, you're talking not only about Sri Lanka, but if it's in Sri Lanka, these standards will validate. But if you're outside Sri Lanka, the protocol may be different. You will have to apply to that country's standard when you're doing that. But you must have clear segregation of how you arrived at cost between the states, between factories, and if it's a byproduct, how did you cost the byproduct? If it byproduct can't be waste means we'll write off. If there's a byproduct, how did you arrive at that cost of that byproduct if you are selling it, and how did you deduct it from the main product? So you must be clearly able to show that, and the regulator will want what the cost auditor will do. So all cost statements will be audited by a certified management accountant. For them, whatever verification to detail itemized level, even if they want a payment voucher or a salary slip, you must be able to provide. Then only the cost auditor can verify and ensure that your cost sheet and your cost statements are correct. Ruchira, anything that you want to add to that?
Kiran, yeah, basically what I want to say is the same thing. In essence, if you take the position of a cost auditor, the cost auditor may want to see a clear traceable chain. He wants to see a clear traceable chain showing that each cost is classified appropriately, allocated using a defensible causal beneficial basis, and treated consistently.
I think what he's asking is applied to joint cost and overhead allocation in multi-state manufacturing. Is there any specific thing that you want to mention in that, of course, particularly say byproducts and waste in joint cost?
Joint cost means you will have to anyway apportion the cost. No?
Yeah, joint cost, Professor, anyway, you have to split off. No, joint cost, you have to split off between the products. And then, of course, the byproduct, what we normally do is the revenue from byproduct, we are deducting from the cost of each product.
Right. I think that's the question. Other one, of course, is about the recording, which we will send. And of course, they say it's a very good webinar. Then another one from Damindra, Stephen Damindra. Kindly share the details to our emails and if possible, get the recording. Yeah, as we said, the recordings will be sent. So those are the things, but maybe since we have a little time, Doctor, you like to discuss a few things? I think I have a few areas which I would like to ask you all. Now, first thing is, I think there was mentioned by Mr. Mahendra about cost reflective pricing. And he mentioned to the electricity sector. I think what the IMF said is not cost reflective. I think they mentioned that it should be all that they should recover all their costs. I think that's what they mentioned. but I think it should be cost reflective pricing. That should be the correct thing. So can we have some comments on that, on the cost reflective pricing, especially for the electricity sector? Kiral, you
Yeah,
have any?
yeah. What we can say is, I mean, we have talked about this earlier also. In electricity sector, when the cost goes high, then only the issue comes whether we will increase prices. So when you want to say cost reflective pricing, I mean, if you talk on the side of the regulation, post implementation of cost accounting standards, we need to verify whether this cost reflective is cost reflective, whether there are any abnormal costs. And if there is actually increase in fuel prices, right now, what are we going to do? How are we going to increase the price? That is, of course, a political decision or a CMA decision, but pricing must reflect the cost, yes, and of course, the cost must be correctly arrived at according to the standard. So then I think it's a difficult, it's a decision that needs to be on a policy basis. Whether we will take based on policy, because in Sri Lanka, CB pricing is done based on historical cost, then prices are forward for the next quarter, like that. So then I think the issue is how to arrive at the correct cost of it.
Yeah.
Then the
Actually, now
standards are very
I just
helpful.
want to now say cost reflective pricing is really be the actual cost. Now,
Yeah,
the
okay.
electricity board has run into a major problem at the moment with the purchase of raw materials, that is the purchase of coal for the coal plants. Now, if there is a variation, now there where they really find is that the although they buy it at the cheapest price, the output, the energy output is much lower. As a result, there are losses. How do you treat this cost? Is it a cost reflective pricing, or is it something abnormal or extraordinary? And who should bear this loss?
Professor, now going by the standard also that we have developed, the abnormal cost or abnormal losses, all these extraordinary items should not be taken into account when we calculate the unit cost. So the point is, okay, even at the time of a cost audit, even if a cost audit asks, okay, how did you calculate the cost of this product, or how did you use this cost information for pricing, we should be able to prove with whatever the information that we have. Of course, the purpose is, or the point is, we should be able to say, okay, this is the true cost per one unit based on our efficient operations. So that is why I think even the standard says when we are taking the capacity, we have to take the higher of our original capacity and the actual utilization. So if the actual utilization is low, for by any chance, it should not be taken. We have to take the original capacity.
Kiral, you have something to say on that?
No, I am in agreement with Ruchira. That's what the standard is saying. You can't take abnormal cost for costing. So in this coal thing, you can't take the loss of that to the price of coal.
Yeah.
Right. So that is abnormal cost. So I don't know, Professor Mangala Fonseca, what is your view on that matter?
Well, I agree with both of them. I don't have anything more to add.
Professor,
Okay.
there is a question on this governance and ethics. So what they're saying is they need to have proper governance and ethics before standards. I also agree. I mean, in all institutes, before, as a chartered accountant, as a chartered management accountant, we are trained on governance and ethics. So that is an area that we have to look at. So I also agree. Governance and ethics should be there. Anything before you practice standards or before you do your job also.
No, actually, I think what we are really trying to do is at the
Mm.
moment, there is no standards on cost accounting.
Mm.
So we are now introducing it so that there will be efficiency, there will be productivity. And because you see, especially if you see, at the moment, we have a very important thing. I don't know whether you all would have realized that we have been See, the World Bank has named us as a now new, they call it the earlier we were as a underdeveloped, but now as a developing economy. So as a developing economy, we have to go forward. So this costing is really going to help the nation and also industries, services, and everyone to go forward. So if we have to have new developments taking place. So definitely the uh, the upper middle income threshold that we are in now, because they called it as a upper income economy by the World Bank, because we have passed the US dollars 4,670. So that means this has to grow. So if it has to grow, then this cost accounting will have to really play a major role, because it will bring in the efficiency, it will bring in the productivity, and it will do away or eliminate waste and corruption. So especially the government, I think we have very many government authorities were mentioned. They now will have to really absorb, or they may have to go into cost accounting, which will really help them in their current day activities and enable them not only to increase the income, but also to ensure that what they are doing is properly done, So that's was a very important area that we may have to look at. One area I think I just want to ask you all is about the pricing, especially for maybe they were talking of certain price control items. So at the moment, there is no proper cost accounting system or standards applicable. So therefore, the government needs to either regulate or maybe legalize some of these, so that the proper costing will be done, because this is really even mentioned by the World Bank, by the International Federation of Accountants, where they really talk of the societal importance of cost accounting standards, the societal importance. To safeguard public interest recognizes a fundamental way to protect the public interest, to develop, promote, and enforce based on generally accepted accounting principles. So I think these cost accounting standards that you all explained, especially for the manufacturing sector, will go a long way and will help all industries, because they have to fall in line and have a standard method by which they will do this. So I think we should continue the good work that we are doing, so that it will really help not only the industries, the service sector, but also the economy, building the economy, making us competitive. That was mentioned in the exports. If we are to earn more foreign exchange, then we have to be competitive in the global market, and that would really come as a result of this cost accounting that they can do. And today the buyers overseas are looking for traceability. They are looking to see how the costing of the products are being done. So these, I think, will really put us on top of most of the other countries and benefit and go ahead. I don't know whether you have any comments on what I mentioned, either
Yeah,
Tirol
of
or
course,
Ruchira.
I
Yeah.
agree with you. We were talking last week also. If you take a institution like the Consumer Affairs Authority, they have a very good scope on applying these standards, because I worked with them about 5 years back on when I was working in the tile industry. They wanted to set a price ceiling for 2 by 2 tiles, because it was expensive in the market for the normal tile player. They could import it very at a cheaper rate. So in that case, having a standard base cost sheet or cost statement which is verified certainly helps them in ascertaining these prices. And even Mr. Raman, when we discussed earlier, he said how medical products or medical services are regulated in India by this having a correct price for even stent. How when you put a stent for a heart, so this thing, the price is correct. Otherwise, they charge abnormal astronomical prices. So actually, the cost accounting standard plays a very vital role in the societal benefit for the people and competitiveness in our markets and our products for exports. So I am in agreement with you, and there is a great opportunity for us to use this. Now, since you have told us about the World Bank report also, which you showed us, demonstrates that need. So it's a apt time that we introduce this to the Sri Lanka country and the economy.
I think our time is almost up.
Professor, there's a question about transfer pricing.
Yeah.
The question is regarding when setting the transfer price, do we consider interest cost? So the answer, what I think is, even when we are applying this standard, what we can say is, okay, the normal regular interest cost that you can see in the P&L should not be used as a cost when you are setting the transfer price. But then again, you can have an imputed capital cost. Now, say for example, by considering your total capital structure, you can have an imputed capital cost, and that can be taken as a cost when setting the transfer price, but not your actual finance cost in the P&L.
Yeah, you can't use that. Yeah.
Yeah.
I think there is a final question. Could this be a part of the financial audit in the future? Does this practice internationally? Of course, the cost audit is something that is there in India, and it is also legislated, the conduct of the cost audit. Now, if you look at the electricity sector, the regulator has laid down that there should be cost records being maintained and a cost audit to be done. Because if a cost audit is to be done, then you need to have the cost records. And I think earlier, Peter also mentioned about the reconciliation that will have to be done between the cost profit and the financial profit. So this is something that we feel will have to be done separately. It will not be mixed up with the financial audit, because the financial audit is for a separate purpose and also for the stakeholders at the AGM where the financial audit is done. But the cost audit is for internal purposes. It is really for internal purposes and also for the maybe the society where they will know that the correct pricing has been done for this purpose. So the government can regulate for different industries. They can regulate and include the cost records, statutory cost records, and a cost audit to be done so that it will be in compliance with the cost audit regulations that it will be done. So this is a new concept that we are bringing, but in India, this is very well developed. Now in India, if you see, there is in the finance ministry a specialized cost, maybe a secretary who is in charge of costing. Then he overlooks all the other ministries on the costing. He overlooks all the state institutions, whether they are maintaining cost records, whether they are doing the proper way of costing. So it has to really be embedded into the government where the cost audit will come, the cost records will come, plus the mechanism by which this can be done. So we need to have the finance ministry to see that there is a separate cost, maybe a secretary or additional secretary in charge of the cost, which will really be beneficial to the government. Because there is another important element in cost, because in government ministries, to incur the cost, they have to collect the funding or the money. So that really comes from the taxpayer, from the taxes collected. So then we have to ensure that these monies that are collected will also generate value to the society. So there are a lot of maybe benefits as a result of cost accounting and cost audit and cost records. Because if today we are preparing financial statements, but if there are no cost records available, it is very difficult to justify that the cost is correct. So this is something that our cost accounting standards and others will be which will come forward, and maybe as mentioned by Professor Mangala Fonseca, there will be the other industries that will be taking up and supporting them in how costing could be done, how cost records should be maintained, how cost audits could be done. We will get the support of the Indian cost accountants, and maybe very soon we will be conducting some of these, like the cost audit, which is new to Sri Lanka as to how this has to be done. But if the cost audit has to be done, then you need to have the cost records and the implementation of cost standards in all these industries. So once again, let me thank Professor Mangala Fonseca and his team, the technical team, Tyrell Roche, and of course Ruchira Pereira for the excellent presentation they have done. They have done extremely well. And I must also thank our Secretariat, the Cost Accounting Standards Board. And if anyone wants the cost accounting standards, that is available, and they can contact our Secretariat, Ms. Rashmi. And I think it's not a very, very big cost, but it is available. So you can collect it and use it and maybe make it available. And also you can send to us any suggestions that you have as to what you all really need so that we can help you and support you. And I must thank everyone for the keen interest that they have and that for attending this seminar and to let us know and have any feedbacks which will support. And I want to also tell you that all of you should enter our cost management excellence awards. We have extended the date to 28th August, and you can get the information from the Secretariat. I think we have already sent it to all of you all. So if you all can take part in it, it will not only help you in trying to win an award, but also in your systems and procedures to see whether you are maintaining the records, and maybe in the next year where improvements could be done. So that's another thing that will happen. And if there are any maybe confidential information that you do not want to disclose, that you don't have to give, although we have asked for various information. If you think it is confidential and you do want to disclose, especially maybe in the private companies, that is not a problem, but improve your costing systems so that not only will your bottom line grow, your efficiency will be better, your productivity will be better, your profitability will be much better, and the society will also gain with the better pricing of the products that you make and competition that will be there among the private sectors. Thank you very much to everyone, and also our Secretariat and Rashika for comparing the event, and all the others who have supported us in making this event a success. But this is will be continued, the continuing professional development of our management accountants, of those in the business sector, of chartered accountants who want to know more about management accounting, because I must also say that you must be not only a chartered accountant, but you must also be a management accountant. That is how we have really learned these things, because we have got qualifications both in the chartered, of course, the first preference that we had, and then gone into the management accounting. Then you can do both areas, not only in the private sector, but even in the public sector, because I had served in the public sector. I don't want to go into detail because the time is up, but definitely all those chartered accountants should follow our course, because we have given exemptions. They can do the final one of the case study and become management accountants, because if they are both chartered and management accountants, then definitely they will really be able to face the future that is there. of the cost accounting standards, the cost audit, the new challenges that are coming up, and also the country in building the economy of this country. So thank you very much once again, Professor Mangala Fonseca, Tiril Roche, and Ruchira, the team that has been working very hard. And I'm sure that you all will come up with the next program within a short time, as there is a big demand from the private sector and the public sector. So thank you, and all the very best to everyone. Thank you.
Thank you, and all the best.
Thank you, Professor. Thank you very much.
Thank you, Professor.